To, of course, Benzinga, where we uncover the technology advances and take a look under the hood, under industries, so that you guys can level the playing field, of course. And who are we talking about? Retail traders out there. It's you guys out there that we're looking after. We're going to go through all the action today. We'll be talking about different areas in sports betting. We'll do updates from everywhere, from catalysts that you can be looking forward to going through the rest of 2023 into 24. Of course, we'll be joined by great interviews today. I'll be joined by Chris Katje. He's going to be joining me shortly here, and we'll get into interview with Dave Mazza, Chief Strategy Officer at Roundhill Investments. And of course, don't forget DraftKings later today, 12 p.m. We'll be joined by Jason Robbins, CEO and co-founder of DraftKings. I know Chris is super excited to do that interview. Let's go ahead. Let's bring him on here. Chris Katje. And like I always say, you might want to get the catch from my man, Chris Katje. So always good to have you on. It's good to see you today, my friend.
Hey, what's going on? It's great to be back, brother. Excited to talk about sports betting, a sector that, you and I know all too well.
Yeah, I mean, I wanted to talk about it too. And, the sports betting has really transformed since our SPAC attack days. I know that a lot of people still remember the SPAC attack days. We're even getting a comment in the
Shout
chat
out
right
in the
here.
chat. Let's go.
Missed the SPACs attack. And I think that we did really good in those days and really trying to uncover how we thought certain industries were here to stay. One for sure was sports betting. And look where we're at after, of course, the betting evolution from 2020 is something that we need to talk about, right? So let's talk about what notable changes do you believe have had a significant impact in its current landscape? So let's touch a little bit on these topics. We'll keep it moving here today. But one thing that I think, Chris, you and I alluded to from the start was that at the start, it was all about one thing. It was about customer acquisition, right? And how much was it going to cost to get this market, right? And that's how it first started. And it was all about just trying to get customers. But now it feels like we're shifting towards profitability might actually matter here, Chris.
Yeah, it's crazy, Mitch. Covering these earnings reports, the big focus now is, EBITDA and profitability. And, it's weird because, as you said, back in the day, it was all about customer acquisition. I mean, even my kids know all these brands because they used to see the commercials on TV all the time, right? Let's face it, we saw so many sports betting commercials as states first rolled out. And now we're getting into that, let's worry about the bottom line. So MGM just reported their quarterly results, and they said that BetMGM had an operating loss of $22.5 million. That's an improvement from a loss of $71.2 million in the year ago period. And they said that it was the first positive EBITDA quarter for BetMGM in history, and that they remain on track for second half profitability as well. And then we had DraftKings just yesterday report a profit, adjusted earnings per share of 14 cents. Their revenue also increased dramatically. And they said that Jason Robbins, who's going to join us later on, he said that EBITDA that they generated in the second quarter exceeded guidance, and they're on their way to achieving positive EBITDA in the fourth quarter and the fiscal year 2024 and beyond. I think that's the key there, Mitch, right? Is not just now, but these companies are looking at profitability down the road, and they're so close.
And I think that's so vital to this is that now we're starting to shift because it feels like they have a good grasp on the market. We'll talk a little bit more about that, of course, coming up with our interviews on Roundhill ETF bets. We'll talk a little bit about that action. But I think another thing is, we no longer have this little kind of reach for investments also in this space. It finally slowed down a little bit, right? When we were first talking about this space, it feels like there was a lot of even small players coming out. Now we're seeing consolidation, and it's no longer this SPAC mania, right? Where investments are just coming left and right into the space. If anything, we're really seeing the space a little bit of a consolidation coming in.
Yeah, and I think consolidation continues to be the factor going forward. I think it'll continue. I mean, we're really starting to see, DraftKings, FanDuel, BetMGM, the top three distance themselves, right? We've even seen like a Barstool Sportsbook that used to have like that top 3, top 5 share in certain states, they're starting to slowly fade away. We're seeing Caesars, right, which had a huge advertising campaign using the Manning brothers and others. They're starting to fade away too, right? They did a huge launch in New York where they offered people like $100 free, right? That's great to get those first customers, but they haven't been able to, keep that loyalty. And, as a user who uses some of these platforms, sometimes it's whichever platform offers the best rewards and also that ease of use, right? You don't want a platform where you're trying to bet on a game live and it crashes on you, right? So that's important to focus on too.
I think it's vital too. And I think that one of the things is these seem to be that the leaders are taking over. We're going to get into why this could be happening, but that's what I definitely see in the industry. I'm sure that's what you see, Chris. And the only question here is, will it remain, right? But I think let's move forward now. Let's talk a little bit about some interesting conversation, which is catalyst that could be coming, right? And then that could be making significant impact in the betting industry for revenue for the rest of 2023 and 2024. Some of these that we'll talk about are a little bit more speculative, right? We're just going to give an outlook here. And like always, you guys look to see how these catalysts come in and especially do what? Give you actual quantitative figures on the revenue. But let's talk a little bit about that, of course. One of the major catalysts, of course, going to be coming up is the 2023-2024 NFL season, right? I think that, of course, we see always a lot of betting around this time of year. And I think that one thing that I will be looking for is a seasonality effect, right? And I talk a little bit about this all the time. And I actually want to show you guys a little bit of a chart right quickly here. And this is DraftKings showing you guys what? Showing you the period between going into August as we've seen DraftKings in the past. So 3 out of the 4 times in the last 4 years, right? And we'll see on this 4th year, if we get another one, it has gone up during this time. This is usually when I start talking about this trade as we're going what? Into August. And the only difference this time that I will state is that we've had a nice rise going into this. But before, in kind of the 2020 period, we also had a nice rise going into this. So now the question will be, will we see this kind of seasonal action come back to the NFL season? So what do you think at least about that, Chris? Are you going to be looking for maybe some increased betting, of course, with the NFL season coming up?
Yeah, of course. I mean, we had preseason kickoff last night, right? The Hall of Fame game. And as much as I thought years ago I would never do it, of course, I was betting on the preseason game, right? Because it's the start of the NFL season. It's an exciting time. And even though it's preseason and it doesn't matter, you're still able to bet on it, right? And then you're able to watch and enjoy it more too. That's my love as a sports fan, is I'm able to watch some of these teams who maybe I don't follow as closely, right? I'm not a Jets fan. I'm not a Browns fan. But I found myself rooting for certain outcomes last night because of my bets. And I also watched the preseason game where maybe I wouldn't have watched the full game years ago. So sports betting has changed that. And the NFL is a major catalyst for all these sports betting operators. And there's more states legal this year. There's going to be more viewers, right? We get these records for Super Bowl, for playoffs every year moving forward. And it's crazy the kind of impact that can have, as you showed on those charts, for these sports betting operators.
Yeah, and I think one thing that I'll be looking for is there's more Thursday night football games now, and I think that that should help also increase the overall betting for the week, as majority of bets come in on Sunday. But now, if we can have multiple games on Thursday, maybe some more bets go in there. And I know, like, I find it hard to play like parlays on Thursday night because it's only one game. But if I have 2 games to pick from, I might take some more parlay opportunities, right? We'll see what happens because of Thursday night football. Another major driver, of course, YouTube TV and Sunday Ticket. How do you think that this is going to affect the industry, Chris? And this is one reason why I've been saying maybe take a look to see how Google gets a lift in this situation.
Yeah, definitely. I mean, you mentioned parlays, right? Popular parlays in sports. In baseball, you've got your home run hitters, right? Will X player hit a home run? In football, we've got the touchdown parlays, right? Will X player get a touchdown? And people like to parlay those together, right? Combo a couple running backs, a couple wide receivers. And then you can't just watch one game. You've got to try to cover all the games. So you watch these highlight shows, these Sunday Ticket where you can see all the different games, these NFL Red Zone where you can just see the scoring plays. Those are major catalysts, not only for the sports betting operators, but the media companies, as you alluded to with YouTube. And I just think this market continues to grow. And especially with all these different betting options, and parlays are becoming more and more popular. So it's a crazy market out there.
Definitely. And of course, we're going to be watching as states become legal. We can get into this conversation a little bit later today, but definitely going to keep watch to see what states come to the legal market. That could always help out. NFL player suspensions. How could this play into it, Chris?
Yeah, I'm curious to see how these NFL player suspensions are handled by the market, right? We track this geo data for sports betting operators, and one of the things I worry about a little bit is there going to be more of a crackdown on this? Is it going to be harder to sign up for a sports betting account for the everyday user, right? You already have to, register, use your ID, say who you are, but as they really try to make sure these players, these friends and family. I mean, we had kickers in college football where they were using their family's account to bet on sports and games that they were in. How do these sports betting operators try to prevent that from happening? And does it affect the everyday user?
All things valid, definitely in the industry. And I think Chris and I could definitely talk about the sports betting industry for the whole hour of our special, but we're not going to do that to you guys. We're going to bring you right to the experts, right? That's what Chris and I are all about. And this is where we try to learn from, right? And I think that you guys out there give a hand, of course, get those thumbs up going. Let's go ahead and go to Dave Mazza here, Chief Strategy Officer at Roundhill Investments. Of course, we're going to be highlighting here BETZ ETF, but they have plenty of ETFs to check out. Let's go ahead and bring in Dave here. How we doing, Dave?
I'm doing well. How you guys doing?
Doing great. It's great to have you on. I don't know if you've met Chris Katje before, but we've definitely been around since kind of the very first starts of kind of when we were looking at the SPAC attack kind of days. And now we've seen this run come from 2020 to where we see the sports betting environment today. So it's great to have you on, ready to talk all about betting. So we're going to kick it off with first a major question, of course, more of that fiscal policy outlook here. What will we see? Will we see legalized political betting in the US? This has always been something in Europe that has been well-established staple of the legalized betting culture. But here we kind of do a little bit of some workarounds to get into any of this action. What do you see out there, Dave? Could you think this could be a possibility?
Well, you're starting off with a doozy here. Look, I think there's obviously a large camp of folks who would love more than anything for that to happen. And there's some perhaps logical reasons why that's not the case. Now, our base case is that that's not on a federal level going to happen sort of anytime soon, but you never know. However, it's important to understand, even with that, roughly about 47% of the US population today has access to legal online sports betting. Now, that's actually going to grow to about 53% over the next months when North Carolina comes on board, Minnesota, Vermont, and then Kentucky, who are close to the legalization and launching services, right? That's according to DraftKings. So the access has changed markedly over the recent past, even if it's not in all 50 states right now.
Awesome. So, Dave, Mitch and I talked a little bit about consolidation in the industry, right? That seems to be a major trend, and it looks like it's going to continue moving forward. We're seeing Fox and the Fox Bet platform. We saw Churchill Downs exit their sports book. We're also seeing PointsBet, selling their U.S. business. What do you make of all this consolidation? Who could come out as some of the winners in the consolidation, and will it continue moving forward?
Yeah, no, it's interesting. So the way we think about it, this is I think a theme that we're seeing across our themes, right? So Roundhill, I think it's of course known for sports betting, but we have funds in the metaverse. We have a new AI fund, generative AI, that is. And the big theme is that sort of it's you could call it a winner take all, or this large getting larger and small getting smaller. We've seen it across the market, whether it's Magnificent Seven and others, and the same thing's happening on the sports betting side, where there's a handful of names that seemingly are scooping up a lot of the action. Now, there's still some, I think, distinction here, which is unique, right? You can't really compare Churchill Downs to DraftKings on a one-to-one basis, but of course there's relationship. I do believe that we're going to continue to see sort of customers gravitate toward either brand names that they're comfortable with, leaders in the space, and it's going to leave others behind, right? To your point, we've already seen it's a difficult operating environment. And now, not just that, now investors are demanding profitability. So it used to be just growth at all costs. So if a company could, with some backing, even from a large name, could make that happen. Now this growth at any cost model is not being rewarded, and more profitable expansion is, and that benefits, companies like a DraftKings, which has been on that journey longer.
Yeah, definitely. You mentioned a couple winners there, DraftKings, FanDuel, and others. And then profitability, which we'll get into in a minute here. But can you just talk about what factors really go into the success of those companies like FanDuel and DraftKings? Was it that early lead, with the daily fantasy element? Is it the ease of use? Is it, the advertising and marketing? What are those key factors that really make them stand out?
Yeah, I mean, maybe I don't want to have a cop-out answer, but I think there's some truth to all of that, right? There's one, the brand, right? So I can confidently say when I'm thinking about it myself, or talking to friends or folks in the industry, a handful of names always come up, right? So that goes back to the theme of sort of the winner take all. Then you have the idea where these companies do have, I think, more of a moat around their businesses that allows them to make harder decisions, right? So whether that's reinvesting, have the funding to be able to move into new markets, kind of blanket that market. A lot of this comes down to, this is the entertainment, right? And with kind of classic entertainment, marketing plays a huge role. So we have to, the word has to get out through a variety of ways, whether that's out of home advertising, whether that's sort of hitting you over the head. The partnership model has gone a long way. And so that to me is a big part of it. And then when I'm in that ecosystem, unless something unbelievable comes along, unless I can not get access to a certain parlay that I might want to use, but of course that's changing on a DraftKings, right? That's been a great growth area for them. I'm going to stick with it. And so because they have the leg up, we're really behind the push toward legalization in many states. I think that's going to continue to bode well for the future, particularly as investors are getting more discerning, like I just said, about company growth going forward.
Yeah, I'll jump in here, Chris.
Go ahead,
Talking
Mitch.
about those partnerships, of course, and I think that you just talked a little bit about that, and I think that a real interesting one is like media companies with Fox and FanDuel, and how could this affect the performance moving forward, right? I think that we're really starting to see a adjustment in marketing tactics, also going for more influencers, and you see more TikTok. So how could this be influenced by partnerships like this with traditional media companies?
Well, I think that's going to be a huge leg up. So the companies that can, whether it's a FanDuel or DraftKings, and there are others, right? But we tend to gravitate toward leaders in the space, like a lot of themes, where if you can take that sort of full experience, right? So you have the actual game itself or activity itself, let's just call it that. And then, in the intro to when I came on, you were kind of talking about Thursday Night Football, right? Great example. Right now, I'm going to be more involved with it. I'm going to pay attention to it more, even if I care so little about the teams. But then I'm going to be seeing the media side of it. And I'm going to have kind of like, it's almost a soup to nuts approach. So the companies that are doing that and then kind of finding both the leagues and then the individual companies, even when it's not legal in that particular state yet, is a very, very powerful model. So I think that's going to be kind of a macro theme that we'll continue to see.
So, Dave, I want to turn to maybe the elephant in the room. We have this entry into sports betting from Fanatics, and no one really knows what's going to happen, when it's going to launch. But obviously, Fanatics has a big war chest. They've got some big brands. They've got some money to play with, and they've got this huge base of customers. How do you think Fanatics plays out? Are they going to be able to take share from some of these competitors right away, the big players, or are they going to help wipe out maybe the smaller consolidated companies out there?
I think that is a really interesting sort of it's kind of an interesting state of the industry, right? So you're hitting the nail on the head. This is a company I wouldn't necessarily bet against because of their history, but at the same time, it's not an easy journey, right? It's not necessarily overnight gonna switch on for them. But what they are doing that I think is interesting is having this phased approach and kind of not getting out over their skis, excuse me, even if they have, the backing to do so. So as that sort of app rolls out, and it's a pretty, from what I've seen, it looks pretty interesting. The features and user interface is really strong. So that's going to help. Now, that will be a big leg up so they can compete with FanDuel, DraftKings, PointsBet, what have you. Now they have to get the conversion rates right, so that's going to take some time. So to your point, jury is still out here. The beta side of it seems to be interesting. I think again, this is a company that probably could emerge as a winner, and it's probably going to hurt the smaller players first, who have struggled already to get established in the broader ecosystem, let alone someone with deeper pockets coming in now.
I want to turn back to profitability. You alluded to it in a couple of your answers. We, of course, have Jason Robbins coming up with an interview from DraftKings after this. MGM and DraftKings both reported earnings recently, and one of the items they covered was the EBITDA and the profitability, right, that they hit, and that they're looking, down the road to keeping that profitability. How does this factor into the sector, and how does a company like Roundhill, when you're trying to pick the holdings for a sports betting ETF, how do you factor profitability into how important it is for a company to have that as a top holding in the ETF?
So when we think about, I'll start with the second part of your question first. When we think about constructing the basket, working with our partners, we're not necessarily taking into account one company's profitability over another, because our primary objective is kind of creating a beta or an exposure to the market globally, wherever that may be. But what's important here is one of the reasons why I think we're seeing the BETZ ETF and many of the companies in the portfolio outperform broader markets this year. Looking at the S&P 500 is this improved profitability? Is this the sector as a whole? So, for example, if I look at the BETZ holdings, using data from Bloomberg, they're forecasted to grow sales this year on an average of 16.2%, and their EBITDA margins are going to expand by 192 basis points. So, that measure of operating cash flow is really important. And in addition, if I look at the first quarter, right, we're now into, of course, second quarter earnings season. We had DraftKings nice numbers last night. They beat estimates by 50%. So analysts, I think, got way too bearish in the sector, maybe for good reason. And now companies who have committed to moving away from just growth at any cost, having more profitable, probably more sustainable expansions, are gonna emerge as the winners.
All right, we're going to start wrapping up here. We'll be moving over to DraftKings, but always great to have you, of course, Dave. And I do want to go ahead and give everyone an opportunity here to take a look at Roundhill's ETF. They're not only, of course, in bets and sports betting industry. Of course, you guys can check all that out. I'm throwing up the link right here so you guys can get directly to the ETFs. Always great to have you, Dave Mazza, Chief Strategy Officer at Roundhill Investments. We'll have you back on. Appreciate you coming on today.
Thanks, Dave.
Thanks, guys. Enjoy the rest of the show.
All right, guys, we're going to keep going with the sports betting industry update with, of course, our exclusive interview today. I'm going to let Katje take over here. You guys have a great time.
All right, everyone. We hope you enjoyed that conversation on sports betting, the NFL season, and more from Mitch and myself, and also that conversation with Dave Mazza, the Chief Strategy Officer, Roundhill Investments, the BETZ ETF, ticker BETZ. And now it's time to get into one of those companies we just talked so much about, right? DraftKings, ticker DKNG. And we are honored here on Benzinga to be joined by Jason Robbins, the co-founder and CEO of DraftKings, to hear more about that quarter that they just reported last night. Jason, welcome to the show.
Thank you.
Awesome. Well, Jason, it's great to chat with you again. Obviously, second quarter results last night. We saw revenue and earnings per share come in ahead of estimates from analysts. What were some of the key highlights in that second quarter that led to such a beat from your company?
Well, I really think it was a collection of many different things that we've worked on over not just the last quarter, but over the last year and really 2 or 3 years. Particularly starting with almost 2 years ago now when we migrated onto our own technology platform and were able to start doing a lot of the things that we hadn't been able to put on the roadmap. So I think it starts there. It starts with the product. It's the most important part of it. And I think the progress we made year over year on the product was extraordinary. I feel like we have the best product in the market now, and I'm very excited about the offering we have on tap for this fall. I think secondly, we had a great year over year result on the marketing front. Customer acquisition was way up. CAC was down. Usually you don't see that. Usually when the customer acquisition number goes up, it means you spent more. But the fact that we're able to actually lower CAC and acquire significantly more customers year over year, really, really great thing to see. Again, lots of hard work optimizing the marketing mix and really, figuring out what works. And that's a never-ending journey for us. And then just across the board, lots of improvement to the customer experience. We were able to really fix a lot of UI issues. We were able to fix a lot of things that were, creating friction unnecessarily for customers. And, across the board, I think just great execution. And, it's really what this is about. There's not, one little thing. Like I said, the product's probably the most important thing, but there's so many things you have to execute on to be successful. And I think the team's just done a great job doing that over the last couple of years.
Awesome. So along with the second quarter results, we also saw DraftKings raise guidance for revenue and EBITDA for the full year. Walk us a little bit through what goes into the confidence, in this market environment to raise estimates for revenue and EBITDA as you look to the full year results.
Well, I think really it's been the work and the trajectory that's created for us. And that's a big piece. And then also we know what we have planned for this fall. We have a lot of really exciting things coming out on the product front. We have some really cool things we're doing on the marketing side. So, I think we feel really good about our strategy and our plan for this fall to win. And I think we feel really great about the trajectory of the business in general. The KPIs are all really trending in a positive direction. And there's really clear drivers that we can point to that tell us why that's happening and also give us confidence that it's going to continue to happen.
In the second quarter, we saw that positive EBITDA. You talked about the confidence for positive EBITDA the rest of the year and 2024 and beyond. Talk to us about this path to profitability, right? DraftKings had this plan in place from the start, grow the customer base, but also always having that eye on profits down the line. How did this match into those original estimates, and how will you maintain that profitability moving forward?
Well, I think that what we've certainly proven is that this is a business model where as you inflect towards profitability, there are a lot of tailwinds and a lot of different things that are going to create outsized growth in the bottom line. Obviously really important to continue to have top line growth, but when you can drop that revenue growth at a very high flow through down to EBITDA, that becomes a very powerful combination. And I think that's what you're seeing in Q2 is a very, very nice flow through from year over year. And that was despite the fact that we had 2 recent state launches in Ohio and Massachusetts, and even Maryland is still kind of in investment mode. So really, I think great to see that flow through. And, it comes from a variety of things, but what it really amounts to is that most of our COGS are for a variety or against a variety of different metrics. And a lot of them are not actually directly tied to net revenue. They may be tied to gross revenue or handle or traffic on the website or on the app. And I think that, because of that, you get great flow through when the revenue increases. Hold increased revenue, flows through north of 60%. If you look at promo reductions, that can flow through, the revenue that creates can flow through at 90%. So I think, as you see that, and then you also see in our older states, marketing is going down. There's just so many levers moving that are really, I think, contributing to the rapid inflection towards profitability and pointing towards, I think, what the business can do going forward. And we'll talk more about what those specific numbers look like for 2024 and beyond next quarter. We have an investor day coming up in November, which we're very excited about. So we have lots of good things to share about the future there. We decided for this call, we were going to really focus on not only Q2, but the rest of this year and the things that we're doing to win in the fall. And that, in the next call, we were, as well as the investor day, we were going to talk more about the long term, including an outlook for 2024.
So there's this huge balance between, growth and acquiring new customers and that profitability. You mentioned these new state launches. We also have some consolidation happening in the industry. And we also may have, the launch of a competitor coming down the road. Do these factor into, weighing the spending versus profits? And also, do competitor launches factor into marketing spend increasing down the road?
Really, competitor launches don't affect our marketing spend because we base it on what our return is. And, really, I think that has more to do with the overall media market, which can be affected by a competitor. But so much of the media market is really driven more by auto and insurance. And, those are the things that really move the needle on pricing. So I think that really it's more about the macro media market and then also how good a job we do optimizing. And I think between those two things, we feel really good about our plan in the fall. We feel really good about the efficacy of our marketing spend, and we continue to believe that we will see positive trends on both the CAC and the new customer front. The other thing is I was watching the previous interview you did, and Dave was talking about, and I actually completely agree with him, that what you're going to see is that the operators that are finding ways to drop that revenue that they're generating through at a high flow through and to really be able to balance the prioritization of growth and profits as opposed to growth at all costs, that's who's going to emerge. That's who's going to win here because that's a sustainable model. We haven't seen that yet from some of the new competitors in years past that have entered. We've had new competitors pretty much every NFL season that I can remember since we started Sportsbook in 2018. And we don't expect that to change. There's always, new competitors coming in. There's always competitors that are all of a sudden in a new state, spending more and didn't previously. And I think our results have continued to be strong in the face of that. And I think it really comes down to the investment that we've made in our product and also the culture and the balance that we've created around both, driving top line growth and driving profitability and efficiency in the business.
And speaking of new launches, we have Kentucky coming later this year. You now have Kentucky factored into that guidance for the full year. What goes into finally bringing Kentucky into the guidance and, making that such an integral part of the second half of the year?
Well, really, the big thing is that we didn't know in our last quarter what the launch date would be. We didn't even know if it was going to be this year. There were comments made, but there was no firm commitment. And we've seen too many times where, somebody mentions a date and then when it gets to the time for the gaming commission to actually make a decision on launch, it's 6 months later. And all of a sudden we've, put something in our guidance that we didn't really want to. So we've really taken the approach of saying when we get a firm date or at least, enough where we can nail it down to like a 30-day window, then we're going to add a state to our guidance. So same story with North Carolina. North Carolina could launch as soon as January 8th of next year, but I've heard things thrown out that it's like, next summer. So pretty big range there. And so, once we get clarity on that, we will certainly include it in our guidance. Probably won't have much of an effect on this year unless it's a really early January launch. But I think that's another example where it sort of just makes it confusing if you start putting things in and then changing them. So we've just had we think the cleaner approach is to say no new state goes in the guidance until we know when it's launching and we have clear line of sight to that. And once we do, then we'll add it to the guidance. And we'll, I think what we've also been able to do, which certainly I hope makes investors happy the last few quarters, and is when we do add it to the guidance, we're still, despite that, improving. So we're not only absorbing the short-term loss that we experienced with launching a new state like Kentucky. We're actually doing even better on top of that. We had over 100 million improvement to EBITDA, despite the fact that we had a 30 million headwind from Kentucky, which to me is really exciting when we can get to a point where we can actually improve guidance and add in something that's a headwind at the same time.
So, Jason, you mentioned the NFL season. We're getting closer and closer to kickoff. We had preseason start last night, and many people, myself included, were betting on preseason games because, football's back. We're ready to go. Any early readouts or color on what this NFL season looks like and how it's trending versus past years for DraftKings?
Well, really early, but definitely we have some early indicators from how our best ball product's doing, from how some of the preseason, with the Hall of Fame game kickoff last night are doing. And it looks like it's shaping up to be a great NFL season, which isn't surprising. I mean, we've seen this time of year be an incredible growth moment for the industry, really since 2018 when New Jersey first launched in August. But, I think it continues to be a great time of year, and I'm expecting big things and big growth this NFL season.
My colleague Mitch talked about Thursday night football games, how we're getting some more primetime games. We also have a game the day after Thanksgiving for the first time. I know one game doesn't move the needle for a company, but do these extra primetime games, is that a catalyst going forward?
Oh, it definitely adds value for us. I mean, it's great for everybody. It gives something, for people on like a Black Friday. I think it's a great idea, right? And then, of course, it's helpful because it adds another game for people to bet. What you find is that these days that have like a single game, that game is going to get on, in terms of betting volume more than, say, the average game on a Sunday will get, just because there's so many to choose from. People are spreading out more. So when you add these days where there's like one or two games, or in the case of Thanksgiving, there's more, but it's still at any point in time, there's one game being played. That really is powerful from betting because people are sitting around watching football. They want to bet. And, when they have 10 different options, they may pick one or two or three of them. But when they have one, they bet on that one.
And Jason, last question here, turn to the other football and talk about what in America we of course know as soccer. We have Messi coming to the MLS. So, we've seen DraftKings do some boosted bets and some promotions around Messi. And we also have the Women's World Cup where the U.S. advanced to the group stage. How do items like that factor into maybe soccer growing more than normal years, especially in the U.S.?
Well, I think Messi is going to be a big game changer for MLS. You've already seen a spike in Apple TV subscriptions, and anecdotally, I have so many friends who signed up because of that. So I think that's going to be a real big growth catalyst for the sport, which of course is great for us. Soccer is already pretty popular. There's so many different leagues, right? So I think MLS being able to get a marquee player like that is really just, the marquee player, right, is going to just grow it in a step function way. And I think, the Women's World Cup is a great story, and it's part of a broader story. We are seeing an enormous increase in women's sports being bet on DraftKings. We're seeing an increase in female sports bettors coming onto the platform. And I think something like the Women's World Cup is a great catalyst for everybody, not just, for more women to come onto the platform, but also for more men to get into betting women's sports. And, if you look at WNBA, it's way up year over year. So really exciting to see. And I think bodes well for the future of the audience to be able to expand and reach more demographics, as well as to just have more exciting sports and more diverse sports for people to bet on.
Awesome. Well, once again, Jason Robbins, CEO and co-founder of DraftKings. Jason, congrats on the second quarter results, and we look forward to talking to you soon.
Thank you so much. Have a good one.
You too. All right, everyone. Well, there you have it. DraftKings CEO and co-founder Jason Robbins talking about that quarter. I want to bring back in my colleague, Mitch. Two great interviews here, right? We got into Roundhill with the BETZ ETF, the first peer play sports betting ETF in the industry. We got DraftKings getting to profitability. Again, Mitch, a couple of years ago, we weren't talking about some of these topics, and now here we are. So it's exciting times for sports betting.
Yeah, big wins. I just look back at, it's been, just only 3 years, really. I feel like this has really kicked off. And I think it's awesome how we started to shift forward towards more of a focus of profitability. That was our big focus at first, right? When would that shift happen? And when that would happen, we knew that there would be certain players that would be stronger than others. Now we got to continue to watch the catalyst for the rest of the year. That's why we tried to cover some of these. And of course, like I said, keep your eyes on the actual quantitative revenue increases from these catalysts, and that could definitely give us some edge out there. Like always, I wanted to get into all the sports betting industry because that's what we do here at Benzinga, is truly level the playing field for retail investors out there to understand industries they might not have understood until today. Thank you for joining me, Chris Katje, one of our best analysts, journalists, and covers a lot of different areas, goes to cryptocurrency. He does it all here at Benzinga. So thank you for joining me today, Chris Katje. And of course, everybody that we were able to interview today. Thank you once again, Dave Mazza, Chief Strategy Officer at Roundhill Investments. And of course, we can't say enough for DraftKings joining us today, CEO Jason Robbins. Always good to have you guys on, and we'll have you back on another sports betting industry update right here. Chris Katje, Mitch Hotch will be back with you guys. Benzinga of always, and keep pushing your trading journey. We'll see you next time right here on Benzinga.
Thanks, everyone.